Big moves in gold, and we all want to know what's coming next. Well, I wish we knew. Nobody seems to, but there are parts that we can look at that seem to be pretty clear. We're going to take a look at that. So this has been a particularly strange year for gold. We've seen wild growth in terms of price, and that's been on demand for gold, driven both by what you might call normal circumstances and also abnormal circumstances. Things as simple as late night posts on social media about trade policy that have signaled to the world they need to get more gold. And what it actually might mean, at least in some cases, is you need to get out of US dollars and into gold. So if you're like me, buying a little bit of gold when you can, selling only if you have to, well, the trader activity is making things a little bit harder. A little bit harder, like 1980s harder. And the reason 1980 is coming up is that the monthly RSI just hit the highest level since 1980. That means that gold is extremely overbought, or at least it was when it ran to $3,500. And that had some people thinking, well, here we go, and other people thinking, well, yeah, not yet. But how would you know? There's no chart out there that's going to tell you what kind of social media blurt we're about to get next. Let's get a quick shout out to Summit Metals. The spot price might be high, but at least the premiums are low. So if you're looking for gold and silver, summitmetals.com. So like most of us here, I'm just a retail buyer. I'm buying when I can, making small course corrections around spikes and around dips. So normally I'll just look at fundamentals and I'll have a decent idea what's coming. I can time my purchases a little bit. So if you take the wide view, you think about gold as an inflation hedge, that typically makes sense as long as you aren't looking in 2022 expecting some kind of real-time correlation. You could also look at rate cuts and the expectations for more rate cuts, and you can look at geopolitical tensions, you can look at regional wars, you can look at central bank demand. All of those added to the rally in 2024, and it made sense. This year, it's not just about inflation. It's not just about rate cut expectations or central bank demand or even good old-fashioned geopolitical tension. There's more to it. There's a shift away from the fundamentals, and at least right now, what we're seeing is a shift away from the US dollar. It's a pretty clear vote of no confidence. Now, I'm not here to get political. I'm just here to comment on the gold buying part. And the part that makes that difficult is that this rally isn't based on fundamentals that are being priced in. Not being priced in because nobody can predict the next policy turn. Now, this volatility shows that investors keep getting caught off guard. And if you're trying to buy those dips as a trade, or you're trying to go all in on something because of the current trajectory, well, tomorrow it could look different. Now, the thing that gold does have going for it is that not knowing what's coming next still benefits gold as the popular safe haven asset. But if you watch the charts, or if you've just been paying attention, you know that it's not just going up. We keep seeing buyers on the dips, so those haven't been significant, but we're still seeing higher levels of volatility. We saw gold pass the $3,500 mark in Asian trading, only to fall back to the 3,200s a day later. Now, that drop to 3,290 was a 1.5% drop, just over, I think it was more like 1.7. What caused it? Well, optimism around a potential US-China trade agreement is what caused it. The dollar actually jumped on the DXY. Now, does that feel fundamentally correct? Well, not really, because there's actually no deal in place. Now, all of this is noise, and if we're just looking for cues to buy or to wait, well, it's really hard to see that. Looking for those dips, well, we're going to see them, but we won't know if that was the dip or it was just the start of something bigger until a few days later. That's the extent of the volatility that we're currently seeing. Now, at some point, we get back to what happens to gold price when we see rate cuts, what happens when we see central banks buying more, what happens surrounding geopolitical tensions. That's mostly what the earlier bank analysts' forecasts had been hinging on. And Bank of America said $3,500 gold in 2025. That was a recent upgrade. Goldman Sachs, they said $3,700 with $4,500 gold being plausible. JP Morgan said gold would exceed $4,000. There are others out there saying $5,000. So what? What do the big bankers know? Well, they tend to know how to be conservative. And if you're trying to figure out how and when to buy, you should be looking at two things. The first would be the current volatility and the likelihood that that's going to continue. We just can't seem to predict these late night social media posts. The second might be what the normally conservative analysts are saying, because the reason here that I'm referencing the big bank analysts is that there are lots of people calling for $10,000 gold, $14,000 gold, $20,000 gold, but these are mostly the people who've been perpetually wrong for decades using bad math and fantasy cases. I'd rather look to the analysts than the self-proclaimed gold bugs. Just a really quick look at where we're at. Gold is already the best performing asset of the year. And if you were to look at the market cap, for those who haven't, you'll see that it's at the top of the list. And gold just added $1 trillion to its market cap in a single day. That was before it dropped 1.7%. Now, gold just hit its 55th all-time high in 12 months. Really, everything says gold is going up. Even Trump is posting, "He who has the gold makes the rules." So if you're looking for the general sentiment on gold, it's very optimistic. Now, I'm going to add one thing to that. If you're a person who buys physical gold, you should be cautiously optimistic because the price swings are happening at the speed of online trading, and we aren't seeing gradual changes from people who are perpetually long on gold. We're seeing chaotic swings from investors jumping from platform to platform every time a thought gets posted to social media. You have to remember, those kind of investors can sell faster than you, and that affects the price. So what that means to me is that I'm not going to race to buy more, to buy faster. I'm going to be careful. That doesn't mean I'm not buying. It just means I spent years buying when the price was depressed, when investors weren't so excited, so that the gold that I have can work the way it was intended. Let's call it good there. I see lots of questions on whether we should be buying now from people who are new to gold, whether it's too late for them to get in, or maybe it's a casual buyer wanting to know if they need to go ham now. Well, I've been mentioning the bank analyst numbers for the past few weeks, and I've been doing that on purpose. They think these big numbers are ahead of us. They're typically more conservative than some of us, but those forecasts have not changed my mind. I'm buying a little bit slower than I was, because it's just really hard to predict what's ahead. Not that you ever know, but right now it's even harder. That's me. So let us know what you're up to in the comments. And then while you're there, be sure to hit that like button if you found any of this interesting. Be sure you're subscribed with notifications turned on if you want to hear more on the topic. And if you're still here, thanks again for watching. I always appreciate your time. Take care.